Good morning, everybody, and welcome to our webinar this morning, State of the Nation 20. And this episode, we are going to be focusing on consumer and retailer sentiment in the market. So I'd like to welcome today Adrian Lemmy, Director of Research and Gaming, Director of Retail and Gaming Research at Citi, and also welcoming Brian Walker, CEO of Retail Doctor Group. Good morning.
Good morning. Great to be here. Good morning, Adrian.
Morning. Thank you. Thank you very much, Brian and Anastasia.
We're delighted. Pleased to have you with us. And I know you've got such great content to share and maybe explode some of those myths that are out there about where we're at. So we're looking forward to that.
And just a couple of bits of housekeeping before we start. So if you do have a question for Adrian or myself or Brian, please put it in the Q&A function in Zoom. Also, if you would like to watch this later, there will be a copy emailed to you later. And also you will get early access to the 2022 Consumer and Retailer Sentiment from Retail Doctor Group Insights division. So this will be coming to you in your inbox later. So firstly, pass to Brian just to give us a quick welcome and start.
So here we are, State of the Nation number 20. And of course, we move into a period where retailers are experiencing growing costs of living, of course, inflation, supply channel issues. And we're delighted to have Adrian with us because Adrian, as Director of Retail and Gaming Research for Citi, does a lot of fantastic work in really analysing what the market's doing, both at a macro and a micro level, and how retailers are responding in the various categories. So really pleased to have Adrian with us. And of course, this marks the launch of the third year, I believe, of our retailer and consumer sentiment. So here we explore through Anastasia's team what retailers are saying about the market, what they're saying about their customers, what they're saying about conditions. And then we go out to consumers and we look for alignment or misalignment and then how to close that. And there's some fascinating insights to share with you. So looking forward to this morning and of course, ably joined by Anastasia Lloyd-Wallace, our Chief Operating Officer and Head of Consumer Insights for the business of Retail Doctor Group. So thanks, everyone.
And just quickly before I pass to Adrian, I have put in the chat Adrian and Citi's disclosures. So that's just for everyone to understand what we're going to talk about today and how you can use that. So please just have a quick look at that so you just are aware about the data that we are going to talk through. So without further ado, welcome, Adrian.
Thanks very much for the introduction, Anastasia and Brian, and it's a pleasure to be here today. Look, we'll just get straight to it. What I wanted to do today is firstly provide some context on how retail is travelling at the moment from a top-down perspective, and then looking at the categories, see how some of the consumer habits have changed from prior to COVID, and then put forward some views on our outlook, which I think Brian alluded to. There is a lot of fear and gloom out there, driven by the media, but we see some reasons for optimism, which I'll share. So firstly, with this slide, what we show here is in the dark blue columns, the growth for the month of April 2022 on the PCP, and in the light blue diamonds, we're showing the long-term run rate of growth in these various categories. And what you can see straight away is that there's a broad-based outperformance of retail against the historical growth rates across every category. Secondly, the categories that were seen as COVID winners, such as those related to the home, like furniture, electronics, hardware, perhaps surprisingly, they're actually massively outperforming still the historical growth rate. So while we are seeing recovery in some of those reopening type categories, such as eating out and clothing and footwear, we're still seeing resilience across all of retail. So I think that's an important point to note. That now this data is April 22. The data for May that only just came out recently is also very strong. So there's no signs of a slowdown just yet.
And these numbers, Adrian, include online or so the full total retail spend?
Yes, they are total retail spend. Yep.
So we've still got quite
now
a lot
moving
of
on to this. Sorry, you go.
Beg your pardon, we've still got quite a lot of momentum in the economy.
Yes, definitely. And moving on to this slide, what we show here is the Kepler Analytics data, which measures foot traffic through shopping centres, and this is mostly meant to be representative of specialty non-food outlets. And this data is very fresh. It's up to late June. And what you can see here is that really some habits have changed through COVID. According to this chart, we're seeing that traffic into stores is still well below, pre-COVID levels. But what we are seeing is you can see the sales growth is positive. And so what it shows is that we're actually seeing a massive step up in conversion, which I'm sure you've all noticed in your own businesses. And to us, this reflects the rise of mission shopping, where people are doing their research online and then coming into a store with a clear purpose. We also understand that CBD retail has not fully recovered, and we believe this is linked to a few factors. One, the flexible work from home arrangements that have endured. Many corporates are encouraging at the moment 3 days a week in the office and 2 from home. And we confirmed this actually in our recent survey of consumers. We saw a strong preference for hybrid work for employees whose jobs lend themselves to it. We're also obviously still seeing a lack of international tourism, which directly impacts CBD retail.
Mm.
Now, this slide here is really it's really the killer chart in the whole pack, and it is a little bit complicated. So let me just step through it a little bit. So what we try to do here is to show how the capacity of consumers to spend in domestic retail has changed relative to FY19, so basically pre-COVID levels. So starting from the left, you can see that in FY21, we're saying that spending capacity across the main factors lifted by about $142 billion in 21, and unsurprisingly, that was a very strong year for retail. However, what I would point out there, and I'll come back to it later, is that more than half of that boost in capacity actually went into incremental savings. Retail during the FY21 only lifted, I think, from memory, about $33 billion. So the point is that most of this money was actually saved, and I'll come back to why that's important later. So if we step through, we put a projection through into where we see fiscal 2022 ending, which is obviously just ended. And clearly the big difference this year has been the lack of fiscal support. So you've had obviously the cash handouts and the JobKeeper stuff end. So that's obviously been a drag. And we have seen higher petrol prices, of course. But importantly, travel still remains depressed, at least in 22, relative to pre-COVID levels. So it hasn't been that much of a drag in 22. So if we look at 22 was a big step down, but still quite positive conditions relative to 2019. And I think we're seeing that reflective in very strong retail sales figures, as I've just noted. If we then step through the remainder of the chart into 23 and 24, this is obviously where it gets more difficult. And this is where the numbers are basically changing daily. So the main impacts we can see are interest rates obviously increasing. Now, what this $41 billion hit in 23 is based on is Citi's own internal forecast for the cash rate. So we expect the cash rate to hit 2.6% by the end of this calendar year. And then by the end of 2023, we expect it to reach 3.1%. So what we do here is we factor that in. There's about $2 trillion of mortgages, but we do know that 40% of mortgages balances at the moment are on fixed rates, and they have an average duration of 2 years. So the point is here that the full impact of the rate hikes won't flow through until FY24. And that's why you see another hit in FY24 of about $21 billion. So we've got that to come through. And the other key factor here is travel. So we assume travel will continue to normalise back towards pre-COVID levels. So in 23, we expect domestic travel to be back to normal. And we assume that international travel gets to about halfway recovered. And then the final bit of that international recovery comes through in 24, which is why there's a further step down of $18 billion in 24. And then finally, the last thing I'd like to point out here is obviously the petrol prices. This is pre the benefits of the halving of the fuel excise, which we count in fiscal support. But it is obviously a drag. Now, it looks like a lower number, but obviously we'd say that with petrol prices, they affect everyone. And so you can't ignore that impact. So where we see things playing out is that in 23, broadly neutral relative to 19 in terms of, these drivers of spending capacity for the consumer. And then going into 24, that's where we see the bigger risks here, because obviously that's a larger drag as you see the full impact of rates coming through and travel fully normalising. So, with that, you could be a bit concerned, and there is cause for concern here, but the next slide will bring us hope, I think. So this is, for us, a key driver of our view that the consumer is going to hold up better than the markets expect into 2023. And what this does here is it tracks via APRA. We can see the household deposits, and you note here that this is a year-on-year growth, and it's always growing. Now it interestingly includes the offset accounts on people's mortgages. And what you can see here is that prior to COVID, the savings were growing at about 50 to 60 billion per annum. And then we saw a massive step up, as I alluded to, in 2021 from all the stimulus and lack of travel. But what's most interesting here is that it's actually re-accelerated. So every time we update this chart, this savings growth increases. It's currently running at about $143 billion year-on-year growth. Now, our thesis is here that as things get tougher and interest rates rise, this rate of saving has to come down. Now, if it came down towards the levels of pre-COVID, that $50 to $60 billion level, that would fully offset the roughly $80 billion hit to spending capacity that we outlined in our forecast for 23. So we're not saying it will completely offset it, but there's a lot of room here to move. And I think when the prior government and some companies have talked about that consumers have saved $250 billion or so through COVID, I think the implication is that they can draw down on those savings to offset the hits that they're taking. And that's not our view at all. Our view is actually mainly that they just reduce their future rate of saving. They don't necessarily have to dig into their existing savings. So I think that's an important point. So this is one of the main drivers of our more optimistic view.
Mm.
The other leg to our view is that I think is being ignored with all the focus on inflation is the strong jobs growth and the rising wage growth that we're seeing. Obviously, the Fair Work Commission's decision will raise wages by at least 4.6% for, I believe, a couple of million workers in Australia. So that's going to help the low end who are struggling with the petrol prices in particular. I think this side of the story is also being ignored a bit definitely by the media.
It's interesting, Adrian, isn't it? Because it all points to more optimism than perhaps some are saying, but it also relies on possibly a slowing down of household deposits and possibly a slowing down of some of those cyclical elements.
And look, I would say to that, there is a history of those household deposits declining in their growth rate. So it's not like what we're saying here is unprecedented.
Yes. Yeah, absolutely. So it points to a cycle of, say, over 23, for example, 23, 24, more conservatism, caution, wage growth, inflationary needs. Well, how do you see the inflation situation? Do you see a natural capping occurring?
Yeah, I mean, look, we've been doing our own, channel checking and speaking to many suppliers and retailers across both grocery and discretionary categories over the last month or so. Mm. And it is quite shocking, the rate of inflation we're seeing, and it doesn't seem to be abating. And so I do believe this inflation theme will persist for at least the next 6 to 12 months. There are some signs that the international, if you like, the imported inflation is starting to slow, but I think we're starting to see signs that the domestic drivers of inflation are lifting. So Certainly when I speak to the suppliers, they're suggesting that it's not just one price rise a year, it's maybe two or three in both grocery categories and discretionary categories. So this is a challenge. I guess what we're arguing is that the wage growth will mostly offset that inflation impact. But certainly what we've shown here is we tried to show here a representation of how some retailers may benefit from higher inflation. And particularly we've noticed that supermarkets tend to benefit from inflation, particularly on their sales growth, but we also believe their profits will also benefit in the end. And you can see here just the representation of Woolworths, seems to have a correlation between its like-for-like sales growth and the inflation in the supermarket category.
Yeah, great answer. Thanks, Adrian.
So, we can skip this slide. I'm required by Citi to put this in here, but I'm not necessarily here to provide investment advice on individual companies. But if you're interested, you can have a look at that. Just to wrap up my part here, look, it's very clear that obviously there are rising cost of living pressures, the broad-based inflation, the mortgage payments, petrol prices, and we are starting to see obviously some spending habits normalise, particularly, resumption of travel spending. So those are headwinds to, the dollars that can be spent in domestic retail stores. However, again, I just point out that, savings have increased at an extraordinary rate for the last 2 years, and there's plenty of room for that to normalise, to soften these sort of impacts that I've highlighted. And we also point to a very healthy labour market as well as being supportive. And then in terms of the categories, we'd say that, definitely from our feedback and listening to the supermarkets, food is definitely experiencing broad-based inflation, and that's going to lift sales. And we do think that there's going to be some benefits from operating leverage on their bottom lines. Discretionary retail is still performing well, and I'm keen to hear more of what Brian has to say. But from what we can see, they're still performing well, but there is obviously going to be a normalisation of margins, which, in many categories have been elevated through COVID on massive sales. So we do see that cooling back. And I'd say for 23, we're relatively optimistic relative to the press market expectations. But 24, obviously, there is the full impact of the rates and the travel recovery to come through. So that's where we see more risk going forward. But I'll leave it there. Thank you.
Adrian, great opening summary, and thank you very much. It's interesting to see, the counterbalance. And what we've seen recently in the media is a lot of talk about, consumer confidence, for example, implied or otherwise. But what this does is shows us this balancing lever. We've got these high household deposit savings. We've got wages growth. We do take some inflation on board, which is quite good for pricing, particularly in the supermarket end of the business and so forth, and the value end. So thank you very much. And what we'll do now is we'll move into the study that we've conducted, which is retailer sentiment and consumer perception. And I'll ask Anastasia to lead us into that piece. Thanks again, Adrian. And we'll look forward to some questions towards the end for you.
Thank you.
Thanks, Adrian. That was really interesting, and it's good to see how it all links as well, which I think is really nice. So so we'll jump into the consumer and retailer sentiment study. So this was done by Retail Doctor Group, and anyone that's been following our studies, this is the 5th one that we have produced. So we started this back in 2020. It's a biannual study. So we can see we reach out to consumers and we reach out to retailers. And the aim is to understand what are consumers thinking, what are the trends we're seeing, how is this changing in the market, what are retailers doing, and also then where is this gap? Is there a gap between what consumers want, what retailers are doing? So the aim is to really understand, as a retailer, what can we do about it? So just quickly setting the scene, we can see our sample, and any of the data lovers in the audience can come back to this later. This is the sample breakdown, and also the number of retailers that we've had for each wave. So we'll start just with a very quick intro. It's been 2 years since COVID first hit, and we're really still seeing a lot of unexpected trends, a lot of quick changes, and then we're seeing all of these issues with regards to supply chain, consumer confidence, legacy networks, really influencing how retailers are behaving and this quick changing consumer behavior. So during this study, this is our aim to look at all of these areas to understand, well, what are consumers doing? What do they want? What has changed in the last 2 years? And how can we be on the forefront to react to this change? So we start with just having a little look at what have retailers been focusing on in this last 6 months. So what we can see here is 1 in 2 retailers are still optimistic about the trading, but this has decreased since September. So we can see that back in September, it was up at 59% of retailers were optimistic, and this has now dropped to 50%. So we really are seeing this slight change here, and we would expect that given in line with how we see the consumer confidence moving in the sector as well. We then went to ask the question about, well, what are your strategic priorities? And this is showing us the 2 rounds. So this is showing us September in 2021 and June in 2022. So how have retailers' priorities changed? So what we can see here is this move of the physical store. So there's a really much higher priority on the physical store, moving right to the top of the list, that in-store experience and physical retail sales, and creating this brand. So we're going to talk a little bit more about that later. That's not to say that online sales are not still a priority, but if we look back in September, they were #1 priority by a long way. So we can see this, as Adrian's mentioned, this normalization, this return of the physical store.
When we went into the COVID period, we saw that a lot of retailers were investing in their network systems, their business information systems, because many didn't have a unified commerce platform. So a lot of capital went into that. Now, as people are coming through the COVID wave, and we trust structurally coming through it, we're seeing the return to the stores, as well as Anastasia points out, the integration of online into this omni-channel or ecosystem. So we're seeing now a return to focus on the in-store experience, and of course, the supporting online experience, which ultimately equals to the rise of the brand. So a lot more work's being thought through with retailers around what's my brand strategy, what's my point of difference here, how am I building it, how am I capturing customers, how am I building my retail ecosystem? And that came through into this that part of the question.
And I think that links very nicely into this next slide as well, Brian, where we talk about what are the pressure points that retailers are predicting for this next 12 months. So we can see, as not a shock to anybody, that inflation is at the top, and supply chain closely behind, with recruitment and staff retention. So this real focus on the getting the staff and keeping the staff. COVID becoming less of a priority, and less of a concern. And we can see e-commerce and IT systems, as you've mentioned, we've used these last 2 years to really get these up to speed. So they are moving down the priority list.
What's also interesting is that there's a slight skew in this data as I look at that slide. Retailers concerning themselves with macroeconomic events. One might say in some cases to the cost of what's going on in their environment and how they're going to drive their business. But that comes through in some of the study work here as well.
So this next slide talks about what are the retailers' priorities in terms of the consumers. Now, we've tracked this over the last couple of years, and this is what we can see is how it's moved, how it's changed. So #1 that shot right up to the top is stock availability. So in-stock positions and really having that stock in the right place at the right time for the consumers. And when we dig a little bit more into the consumer data, we'll see sort of this importance. And if anyone downloaded our 2022 consumer trends, what we talked a lot about in that report was that we've got this impatient consumer, we've got this, I want it now, I want it immediately. So we can see the necessity of this stock availability. And then again, right at the top, well-trained and friendly staff. So really having that interaction. If consumers are going back into the store, our staff are on the forefront. So again, we're going to touch a bit on that later. Coming into this in-store experience, loyalty's dropped a little bit in priority, but it's still sitting right up there in the top 4. And then looking at what areas of interest. So this is other retailers, what is everyone talking about? What's top of mind? And we can see consumer behavior being right up there, which, I mean, I'm a consumer. If anyone's heard me speak before, I talk all about consumers. So I'm happy to see consumer behavior is right at the top of the list. However, what is also quite interesting here is this brand building. So really looking at, we see this 24/7 brand now. It's no longer the in-store and the online. It is all about this cohesion of the brand. And we go through marketing efficiency and then recruitment and staff training. So again, we've seen the importance of staff training really rise in the last 2 years, and even more so towards the end of 2021.
This is some classic behavior, isn't it? Coming out of the COVID cycle, building brand, getting all channels, and this refocus, this re-emphasis on people, both in terms of recruitment, maintaining, motivating, leading people, but the experience they give customers and the building of a tribe for retailers really coming through in the study.
So firstly, we're going to talk a little bit about this retail ecosystem. And what we're seeing very much so in the consumer data and the retailer data is it's less about the offline and online. It's more about that branded experience. And so this is something we've alluded to slightly before. No surprise to anybody in the room, but we're seeing this really come out, this 24/7 consumer. And then for a retailer's perspective, well, what does that mean? Where do I need to be? Where should my brand be to have that 24/7 exposure? So we first had to have a little look at how a retailer is predicting they're going to see their sales change. So we can see that 79% of retailers predict that online sales will continue to rise. So no surprise there. We're seeing that slow down slightly since September, but again, no real change. We're still seeing as well that 42% of retailers expect to grow their store network. So this has actually increased since last September. So we're seeing again this strong positivity of the growth of the store, the return of the physical environment. So it's more about how these work together rather than the separate channels. I touched briefly on these 2022 consumer trends, and the two that we talked quite a lot about earlier in the year was this time is a currency. So consumers value their time a lot more, and they're wanting to have time well spent or time well saved. So they're looking to retailers to either how they can save time for them or how they can make it an experience. So we could really see this move between experience and transaction. And so as a retailer, it's need to understand, well, are we playing in the experience space? Do our customers expect us to be? Or are we very much in that transactional space? So we can really see this in this consumer data. We're asking, how has the way you've shopped changed in the last 12 months? So we can see I'm more conscious of my budget, which again is no shock there. However, number 2 on the list, I prefer to shop in store. I shop in store as I prefer a human interaction. So we're seeing this effect of post-COVID. All consumers are human. And I think sometimes as retailers, we tend to forget that consumers are looking for this emotional connection. They're looking for that connection with a human. And as we link back, we can see that that's why staff training and having the right people is really paramount here, because this is what the majority, 1 in 3 consumers are looking for. We still see the strong focus on supporting local. We saw this come out late 2020, and it's been a really strong theme throughout 2021, and it is continuing into 2022.
I think what's also coming back to Adrian's point too, it's very apparent, isn't it, that people are using time differently to the point made. We're seeing this movement from browsing much more to targeted, focused shopping, and that's very apparent. And so what does that say to retailers? Well, the really interesting stuff is around investing capital in fit out because people want to come into your stores, investing capital into brand and into people. So building this experience, coming back to, from a retailer perspective, what do I stand for? How do I differentiate? What's my product innovation? What's my product differentiation? What's my training, coaching, and development of my people? And all sitting cocoon nicely into what is my brand point of difference. And consumers are looking for this. They're very much looking for experiences. They've had 2 or 3 years locked up. They want to get out. They want to experience it, but they don't want to see 1990s retail. They want to see evolved retail. And I think that comes through in a lot of this work.
Yeah. We're looking at consumer purchase locations. So as we all know, shopping centres where the majority of consumers are doing their retail. However, we have seen this rise of social media and online marketplaces. So we're seeing this kind of move up through the ranks, in particular in the last 2 years. And if anyone's been online in the last 24 hours, it's currently Amazon Prime Day. So you'll be seeing this real push of the marketplaces, you know, Amazon getting stronger and stronger every year. I think we're seeing around 25% of the Australian market now has a Prime membership. So we're seeing that get closer. If anyone was with us back in 2018 when we first started talking about this, we're seeing that real move to the Americanized with this Prime membership and this online marketplace usage.
So what's interesting about the growth of online marketplaces, to Anastasia's point, is that over 65% of all e-commerce purchases are done through a marketplace. Now, marketplaces are broad, and we're seeing more and more growth of marketplaces. The metaverse, which we'll touch on, is an example of a marketplace. And the point being is that there's a lot of large brands playing in this space. And so for retailers to differentiate and bring people into stores, which consumers want to achieve, we're seeing more and more focus on marketplace for certain range of products, in-store differentiated experience with products for the physical. So they're using the channels judiciously. And I think that's a really key element in the mix.
Yeah, for sure. And I think we are just summarizing here what Brian has just mentioned. We're seeing that growth. But as I sort of touched on before, consumers are still human. So they've really got this need for a social interaction. And through the work we've done within our Insights division over the last 2 or 3 years, we have seen this need for consumers looking for a connection. They're looking for an emotional connection with a retailer. So this again goes back to this. Well, what is my brand? What is my branded experience? What do I mean to my consumers? And we're seeing really smart retailers, if they're creating this connection with their consumers, they're creating advocates, they're creating a tribe. And again, anyone that's heard us talk previously will know that the rise of importance of word of mouth, it's still really up there in regards to the mind of the consumers. So having these brand advocates, having this tribe is very much important in this new landscape.
Absolutely. And so retailers need to keep innovating around product, ranging, really keeping their stores fresh, imagery strong, great. You know, the peel-off rate needs to be focused on the conversion rate, wayfinding, optimizing store layout. Increasingly, we're seeing how retailers are thinking through the reuse of retail footprint. So, you know, partnering with other categories, for example, and certainly using data more and more. And this will start to bring us into the space of artificial intelligence, machine learning. We're seeing more retailer investment in this. And that leads us into predictive technologies, subscription models, and retailers thinking about, well, how do I build new revenue streams through this? How do I think about stock differently? How do I start to re-engineer, reimagine my retail footprint and my retail ecosystem within that, if you like, such that I'm thinking about how we're going to grow in the next few years differently? Because consumers are far more portable, mobile, a little less loyal, and certainly more focused on more instantaneous gratification that comes through as well. But they will stay loyal if you can keep them entertained and keep them in being loyal to your brand. Oh, one other quick thing too, if we think about traditional store layouts, and some of the guys designing now thinking much more around how customer and staff can get more close to one another, less barriers, less counters, much more around the conversation, much more around trust into a brand. And some of the physical work shows us that as well.
I think I'll just quickly skip over this one because we have quite touched on this. This is the growth of marketplaces. We see 58% of consumers are shopping on marketplaces. However, only 18% of retailers are using this method to engage with customers. So we really are seeing a bit of a gap here between what are consumers doing, what are they wanting, and as Brian touched on, those savvy retailers are having this play, what is my marketplace play versus my in-store versus my online, to really connect all these dots. So then we looked a little bit into this omni-channel experience. So 2 in 3 customers have stated that they interact with the retailer's omni-channel tools in the last 12 months. So this is not saying that they've shopped online. This is omni-channel tools, so other options, click and collect, subscriptions, personalizations, virtual reality, augmented reality, online chats. And what we can see here is, again, this rise of click and collect. So anyone that's been following the research that we've been doing, we started off, I think, around that 10% click and collect back in 2020. So this is a huge growth in what have consumers used and tried in the last 12 months. So 48%. So this is really becoming the norm. And again, it's coming back to this: how do I save my customers time? Or how do I make it a time well spent? And linking back to what Adrian's saying about, it really is destinational. Customers have really planned this purchase before they set foot in the stores. So we can see that in the rise of click and collect. Online chat becoming more of a norm. And what was quite interesting is back in 2019, we first started talking about subscriptions, and we really have seen this massive growth in this area. And we'll talk a little bit more about this shortly. It's, again, how do I save my customers time? How do I remove the friction? We're seeing customers becoming a lot more impatient. Make it easy, make it simple. And this is where savvy retailers with this subscription offer are really taking away that friction. So what we did have a look at, which was quite interesting, is when you actually dig this into the different consumer demographics, and you can see quite clearly that our younger demographics are a lot more interested in our click and collect. So that 35 to 44, we can see over 70% have actually used click and collect. So that number shoots up with these younger demographics. And then in particular, when we look at subscriptions, again, this shoots up even further with that 18 to 34 bracket. So we can see they really are interested in this subscription model. So, well, what does that mean for retailers? We can talk demographics as much as we want, but we always want to talk about, well, you need to understand your customer, because if it varies so significantly between 70% and 28% using click and collect, well, where do you put your investment of time? Where do you put your investment of money? So really talking to those customers to understand, what do they want?
What's also interesting, of course, is as we look at these different segments that adapt more quickly to technology and the underpinning technology for areas such as click and collect, we're looking at this gap between retailers who have an audience, a target market that wants click and collect, wants these various technology-fueled pieces. And we're looking and saying, well, okay, have they got the business information system to support this framework? Have they got a good CRM? Have they got a good view of inventory across all channels in real time? Because all of a sudden, their retail assembly, their product assembly, if you like, is moving from centralized models to more decentralized in terms of data. So instead of data by channels, it's one central repository of data with all this live interaction. And so having many retailers have invested, as I touched on, through COVID, but there's quite a few that haven't yet. And we're seeing retailers wanting increasing mobility, such as click and collect. And by the way, we've done a piece on click and collect, and there's a link in the deck here. Do help yourself to read through that.
Okay, so then I think what I want to touch on now is this we briefly just touched on it, how our customers differ and how really understanding. We've been talking about the retail ecosystem. We've been talking about how customers have shopped, whether it's through click and collect. But I think one thing that we want to touch on is, well, understanding how your customers are different. So the importance of really understanding that journey. And I talk a lot about understanding your customers' personalities. So what does this mean? Well, we go beyond the demographics. We go beyond our customers are 18-year-old female. We go really into what are the emotions that drive them. Because what we see when we do this and then link it with our demographics is we see we have very different behaviors for our different consumer personalities. So we've got our performer here, very much interested in online reviews, online advertisements. So their pre-purchase journey is very much in that digital space. Their purchase journey, they want a premium experience, and they want it to be experienced. They want it prompt, they want it quick. Don't make it difficult for them. And in their post-purchase, they're looking for VIP. They're very much our heavy subscription users as well. So these are the guys that are really going to be interested in these subscriptions because time is very valuable to this customer. We then look at our hedonist. Well, our hedonist is very much looking for excitement. So in her pre-purchase journey, it's all about social media. It's all about the influencers. It's all about the excitement. So when you then think of that in store, the store design is so important. The interactions in store, they are looking for an experience. And then again, when we come out the other side, well, how do we bring them back? They're looking for new products. They're looking for special events. So we really see this difference between these two consumers. One, it's very much about how valuable their time is. They want it quick and efficient. The next one, they're really much looking for an experience. And then our third one, different again, our harmonizer, very much influenced by other people. They're looking for social proof. They're dominated, I always say, they're dominated by oxytocin, so the cuddle hormone. So they really do want that reassurance from their retailers. So when they walk into a store, they're looking for online reviews, for word of mouth, friend and family. They're looking to talk to the staff. So this again is so important where the staff are, staff recommendations, guiding them through the process in store. And then when we come back to it, they're going to be engaged in these loyalty schemes. They're looking for engagement and to be part of that retail community. So we can see 3 different consumers, and these consumers can be all ages. Our personality type does not change with age. So what we're seeing here is, regardless of age, they've got very different drivers. So as a retailer, it's very important to dig into these consumers, not just on your demographics, but go that step beyond. Go, what's their emotional drivers? What do they need from me? And then this then comes into, we've seen a bit of a theme in this research about staff in store and the importance of staff. So it's been very important to retailers. And then we now have a quick look at what consumers are looking for. So this in particular was looking at when they're buying fashion, what are they looking for? So we can see very much in the in-store experience, all sizes, easy to find products. But then number 3, friendly staff. So friendly staff comes above clean and tidy store, clean and tidy fitting rooms. So we can really see the importance of staff in this in-store environment. So then let's have a look at, well, what do they mean by staff? What customer service do they actually look for? And this now moves to all stores, not just fashion. So friendly staff is number 1 importance. However, we do see that 57% say, I want them to leave me alone if I want them to. So this has really increased potentially that effect of COVID. And then 1 in 3 customers want staff to genuinely talk to them, to really build that relationship. So what this is really talking about is this really increased of the ability of the staff in store to be able to recognize who that consumer is, to be able to recognize what interactions they are looking for, as we see such a varying differential of what our customers want.
So our deployment division has run mystery shopping now for many years. And what is interesting is to look at the level of, and we're down into the operational detail on this slide, but how does customer service deliver against our customer expectations? So as I touched on, many mystery shops, and we've just taken a quick look at how we performed at that operational level. And of course, as you know, mystery shopping is done at a 100% score. But what we saw was that retail was presenting very well, generally, over 85% on average. Staff were generally pleasant and attentive. But then when we got down to the space where we want the product to be in danger of being sold, we see a decline in averages across all categories. Opening the sale, the classic opening the sale averaged about 60%. Probing, question asking, solution was around 70%. The add-on drops to an average of 45%, and closing the sale averages 40%. I want to take this operational insight and bring it back to Adrian's commentary and looking at the macro view of what's going on. It's not always a case of selling more to new customers, as we know. It's very much a case of maximizing the conversion rate. And many retailers certainly measure very closely their average transaction value, their conversion rate, they coach their staff, but there's quite a few that don't as well. And we would say that in this period, we've seen customers wanting enhanced relationships with store staff and the retailer's brand. They certainly want to be met by pleasant, friendly staff who know their product. And one of the key drivers of this is product knowledge. So how do we build in this consistent customer service levels and zero our teams in on increasing the conversion value of the customers in their business? And this is particularly obviously around the physical space. And we saw through the work that Anastasia's leading, 38% of retailers prioritize staff training. We would say, yes, and you need to have measures and KPIs that frankly are pretty timeless, that lift that average transaction value. If you can put 10% on your average sale, you'll find that 7 to 8% of that will drop to the bottom line. Increasingly, if you've got really good focus on that area, and if you count, so one of the metrics we always look at is transaction counts. Are we increasing our transaction counts, and are we increasing the value of the sale per transaction? So what are some of the key drivers? Knowledge of product, the ability to determine the features and benefits of a product, ability to training to quiz and test staff members, making training incremental and a regular part of that team member's activity, coaching 10 to 15 minutes a week with a staff member, moving the stat. And I can remember we were working, in our deployment stuff, 15 years ago on this, in leading retail businesses. This is one of the focuses. And I think in COVID, we might have understandably taken an eye off this, yet consumers want an enhanced experience, and retailers need to convert that into incremental revenue and margin gain. So what are some of the actions? Certainly focus in on that training, focus in on measurement. The old is new again in this space. Revisit those team and business targets, and certainly focus in on metrics such as conversion rate, average sale, items per sale. And our deployment team work with retailers in this area, our operations team in this area, because it's about consummating and converting and increasing consistency.
Fantastic. So let's just then move on a little bit further down this retail ecosystem into the pre and post purchase. So some stats that we're all very familiar with: customers are more educated than ever before. 88% have pre-researched before they've purchased. No surprises. 86% of 25 to 34-year-olds use social media to interact with a retailer. So this, again, this data is actually from back in September, but we've seen this shoot up drastically in the last 12 months. So we can see that interaction. And 63% start their buying process with a search engine. So we really are seeing this education before they even make that purchase decision.
One of the challenges, particularly for small to medium retailers, is to consider how they deploy this. So what we have now is a consumer that's much more kaleidoscopic in terms of the way that they use brands, the way that they visit, and everything that's been touched on this morning. If you're a retailer and you're turning over, 10 to 25 million to 45 million, whatever that number may be, and you're thinking about, well, how do I deploy social media? How do I deploy my ongoing innovation around my online offer, develop my online offer? How do I find the time and the resource to do all the things that my consumer wants me to do? And so thinking about our organization, thinking about the capabilities and the skill sets we need, thinking about our people model, because consumers want more. It takes more time. It takes more effort, frankly, than it did 5 years ago, 3 years ago, and that will only increase. So we're seeing a lot more partnerships, a lot more agency work, and a lot more retailers thinking about their organization structure today and moving forward.
We look a little bit here at, well, what are these channels that retailers are using and how has this changed over the last 12 months? So no surprises that, as Brian said, digital marketing remaining top focus. We can see that social media is up there to stay. We've seen the rise of out-of-home advertising. So in the last 6 months, radio, vehicle signage, sponsorships really gaining significant traction. Again, unsurprising given that we are seeing consumers outside of the home. But what is quite interesting is what we look at when we ask consumers, well, how do you pre-research and what actually influences you to purchase? So while we can see a little alignment in this Google search and social media, what we're still seeing from consumers is this the influence of the retailer's loyalty scheme or the influence of people around them. So if we look at the top 4 for consumers, top 4 things that influence them are the email from the retailer, number 1, the loyalty scheme, number 2. So that really is showing the importance of collecting this first-party data. And number 3 on the list, word of mouth. And so again, the biggest conundrum for retailers, how do we influence this word of mouth? So we're putting a lot of our time and effort into these digital channels or this out-of-home advertising. However, what we do see here is the importance of that loyalty scheme and the word of mouth on consumers. So I think it's something that we've really still got to think about, that it really is having that influence. We see that out-of-home advertising, consumers I suppose maybe less trusting in this world, the less trusting of this advertising, they're aware of being marketed to. So I think, as Brian said, it's having a look, well, we haven't got all the time to be in all the places. So how do we really focus and target our marketing so we really do get efficiency of spend? So really get this efficiency of marketing. How do we look at where are our consumers and what do they want from us?
And this word of mouth is a fascinating driver of that social interaction. Retail ultimately is many things, but it's also a place where people socialize, where people come to cohabitate and socialize. And so creating those environments shows through in that previous data.
And this is just to reiterate that, it's not a one size fits all, and you don't have to be all things to all people. When we really look at these targeted consumer segments, we see that our performer really influenced by VIP programs. We see that our hedonist really influenced by the store environment. So walking past the store and products, what does the store look like from the outside, windows, displays. And then again, our harmonizer on the other extreme, influenced by word of mouth. So 3 very different consumer types with a very different influence and a very different path to purchase. So being a retailer and thinking about my marketing spend, where do you need to put your marketing spend to attract that consumer that is loyal to you?
This topic of visual layout is interesting because it equally applies to website design and the congruence between the channels and to build the brand.
And as you said, as on every touch point, what is that visual need on every single touch point? I think is very interesting. So we as always, we can't talk about path to purchase without talking about social media. We've seen this grow from around a 10% influence to around, I think, around a 25% influence. And we've got to remember that's an average. We see it significantly change in the different age demographics. And this is looking at, well, where are consumers listening and where are retailers active. And what we've seen massively is retailers have listened. We've seen this move towards TikTok. So anyone that obviously has been awake in the last 12 months have noticed this rise of TikTok. So we're really seeing this shift of retailers using TikTok, 9% increase in the last 6 months. We again can see this, the use of LinkedIn being quite high, however, not so much with our consumers, but we're again seeing this as same as before, the classic strong YouTube, Instagram, Facebook. And we've seen this increase in usage of YouTube by retailers. So we're seeing this move towards this video content. And again, this time poor consumer really looking for this, make it quick, make it easy for me. So we can see these themes coming through this research. And this is just to really point out that we can see the massive differences, and there's lots of lines, lots of colors on this graph, but what it's basically showing you is that different demographics are using different social media platforms. We know this. But what again is, if we then layer this with personality types, we know that personality types have particular preferences in which platform they use as well. So we've got such a large variation. And with limited time and resource, well, where do we start? So really understanding what platforms your consumers on are really important. So let's just talk a little bit about subscriptions. We touched on this earlier. In this time poor consumer, the rise of subscriptions has become popular. And so we see 2 in 3 Gen Z and millennials say they are interested in retail subscriptions. So this really is massive. When we look at 22% have used subscriptions, and there's a potential there of over 60% to actually be interested in subscriptions. 38% of 18 to 24 say they wanted to be able to try new products. So they're interested in these subscriptions to give them inspiration. And 1 in 4 are interested in subscriptions for discounts. So really looking at how they can get discounts in that QSR environment particularly. So when we look at this, and again, we're digging into our demographics, we can see this massive jump. So our under 34s, over 60% of under 34s really interested. So again, understanding who your consumer is. And then we can see, well, what type of subscriptions? So discounts on products, entertainment, food and drink, to try new products, or products I buy regularly so I don't have to order. So there's a whole variety of reasons for why consumers are really looking for these subscriptions. We even see at the very end, early access to new products. So it's almost this FOMO. I want to get it first. I don't want to miss out. And therefore, I'm going to sign up to this subscription. So what we are seeing again, and I feel a little bit like a broken record, is there's so much variation in what consumers are looking for. So it is really quite not a one size fits all for all retailers, really talking to your consumers and watching their behavior to understand what is the right model for you. So I think I've probably said it several times there. Every consumer has a different journey with a brand. So really understanding that consumer will then allow you to understand, well, how do I optimize my marketing spend? How do I get a much better ROI on what I'm putting out there? And also then it will help you understand, well, where is the opportunity? So if we're really having a look at who that consumer is, what's their journey, we might find these opportunities to play, these new areas that we can move into, such as particular subscriptions, new ways to interact with our consumer. What we are seeing from this data is that marketing usage is not necessarily kept up with what consumers are wanting. So we can see a lot of this classic marketing and retailers putting money into these classical marketing trends, classic marketing behaviors. But what we're actually seeing is consumers have changed. The way consumers research has changed. The way consumers want to interact with retailers has changed. So if you've still got the same marketing calendar that you had back in 2018, or you're using same trends, we've seen that real shift in consumers. And now, we've got this huge Gen Z and millennial segment. So they really have driven that change through the market. So what would we recommend? Well, have a look at your consumer segments, review them. If you've not looked at them in 2 years, it's time to have a look again. It's time to talk to those consumers. They've changed so much in the last 6 months, never mind the last 2 years. So really have a look at that path to purchase, that consumer journey, your consumer personalities, your personas. Who are you actually speaking to?
I think one of the pieces here too, to Anastasia's words, are that as we see the rise of brand, less focus on channels, we see new generational change. Gen Z, millennials have the buying power now. We're seeing much greater awareness and comfort with technology. We do come back to a central timeless point. Every time we visit and talk with retailers, there's always a question about, what is your story? What makes your brand unique? What makes you different? And how focused are you on your uniqueness? To engage in these platforms, consistent with the rise in apps, to engage with your target market, you need to be consistently unique. And that's more and more challenging with the rise of marketplaces, 24/7 product, brands selling across channels, rise of B2B. And so we certainly see great value through this sort of work and the work that we do with our retailers, aligning to customers by understanding them intimately, but then playing back their business model and saying, okay, how are we innovating? How are we unique? And I think that's one of the subtexts of this work that many retailers are thinking through.
And then we're going to move into our final section, and we couldn't talk about changes in consumer behavior without talking about the metaverse. So this might be a pain point for some retailers. It might be a dirty word in the room. I'm not sure yet, but let's talk a little bit about, well, what do we see this new evolution, and what does it mean for retailers? So it really is growing fast. And what we see is that 27% of retailers plan to sell in the metaverse in the next 12 months. And what we do see that 48% say not going there. So we really are seeing quite a broad range of sort of perceptions of what this means. But as a retailer, well, what is the position for the metaverse? Is it right for you? Is it right for your business? Is it right for your consumers? So these are lots of questions that we need to start off with. I think, obviously, from my perspective, I always say, well, where's the first place? If we're thinking about going into the metaverse, what is the first thing we should do as a retailer? Well, let's understand how our consumers using this space, and what do they want from us in this space. And when we talk to consumers about how they want to interact in the metaverse, what they want to do, we were quite surprised at the results here. So 1 in 3 are actually interested to interact with retailers in the metaverse. So this is much higher than we actually thought. So if we're thinking that 27% of retailers are considering going in, and we've got 1 in 3 consumers are interested to interact, so do we have a bit of a disconnect there? But what was quite interesting is it wasn't so much whether it was for purchase, it was another brand touch point. So we've quite a lot today talked about this 24/7 brand. It's a lot about building the brand rather than the different channels. And this is where the metaverse comes into play. So a lot of consumers are wanting to be on the metaverse, to interact with the brand, to create, again, another touch point, another part of that relationship with the brand. Look at the products, play with the products, try things on. Not necessarily always to purchase. So it's quite interesting, the variation of the purpose of the retail of the metaverse for different consumers. So I think if any retailers in the room are sort of thinking about, do I need to be there? Well, what is its purpose for you? What is its purpose for your consumers? What are they actually doing in the metaverse? And really studying the way that they interact in their personal time, in their downtime. What do they like to do? And this will really give us those answers.
I think what it really is saying to us is that increasingly, as mixed realities become, to the fore, and in the next period of time, the growth, we've already started to see the impact on artificial intelligence, machine learning. It's really at base camp as to where it will go. As virtual reality, augmented reality starts to really embed itself in the retailers' repertoire and consumer expectations and the way that they consume the brand, then the next wave for that will be, the avatar-led world of the metaverse. And I think what is interesting here is as this increasingly gets publicity, as it increasingly gets investment, it's piquing the interests of a lot of retailers who see it as an extension to the brand. And over time, if I think about the future of retail, there's no doubt we will continue to occupy these various realities. So it's good to see the interest, and it's good to see retailers thinking about how their brand can play. And as Anastasia wisely points out, absolutely Gen Z in particular will really start to expect this out of retailer offers, the relevant retail offers.
So let's wrap up from what have we seen since our previous studies. So this is our fifth in this range of studies. So what have we actually seen change? So again, a lot of these will be no surprise. The physical store is back, both in the eyes of the retailer and the consumers. Consumers have become more connected with brands on more channels than ever before. So we're really seeing this rise of the brand. It's not so much the online versus the physical store. It's all about the brand and these different touch points. Conversion is key. Classic retail skills are of high importance. So I'll let Brian touch on that shortly. Post-purchase engagement is increasingly important. Consumers are wanting to be part of a network, part of a community. They're wanting to really interact and connect with retailers and become those advocates. So what is that post-purchase engagement after they've shopped and they walk out the store? How are we continuing? And creating a community, not just a transaction. So we're seeing this gap widen between transactional retail and experiential retail. So how do we build this community? So bringing it together, what are the priorities that we've seen from consumers and retailers? So building of the brand. Consumers are wanting this 24/7 brand. The retail ecosystem, online and offline. So consumer touch points really vary across different consumer segments. So really understanding what this ecosystem needs to be and where you're playing. Consumers are more educated. So how do we then bring our staff up to speed? This is one of the questions. The physical store has different meaning to customers now. So one of the really interesting things is, what is the purpose of the physical store now post-COVID? They're much more targeted in their use. So how do we then revisit our stores and through the eyes of this new consumer? Customers are human and they want to be treated as such. As if anyone's listened to me talk for the last sort of 4 or 5 years, this is one thing we've been saying all along, and we're really seeing this rise now. Normality has almost returned, the rise of the human consumer, and they really want to be treated like that. So what are some of the gaps and how do we really close it? So I'll maybe step through these, and Brian, you can jump in as well on these ones. So firstly, retail is no longer linear. Brands are everywhere. And we've used a tool called Limbic Insights to really understand a consumer's brand and what your brand means and your brand's emotional connections, and not just the consumers, but what is the brand's connection? So how do you build this emotional brand to really connect with your consumers? Using your consumer research to determine tailored journeys for each consumer segment. So I've talked a lot about that today, to how we really understand your consumer segment, not just through a demographic lens, but going that step beyond. Then moving into, how do we give our staff the tools to create exceptional customer experience? We've talked a lot about the importance of customer experience now, how customers are wanting to interact with staff in store. So how do we give our staff the tools? How do we really increase their ability? What is the
Absolutely. Our Retail Academy caters for that with online and physical retail training, which we've built for many years in retail skills. I'll quickly make one comment on the strategic point around the stores. Whilst we do see a cohort of retailers certainly looking to grow their networks, we take very close attention to this piece around the building of the brand, and how many stores is reasonable for a retailer to have with a good online support. So the role of distribution planning is changing as well. We certainly don't think in general this shop on every corner is necessary, but we do think about the brand penetration and certainly our ability to get that brand across through all the various channels. So that's important. And then when we look into the shops, the stores themselves, our deployment team are always looking at the physical store, the layout, the visual appeal, the maximizing of the space, the maximizing of product, maximizing of the people interaction. And I think one of the themes that Anastasia's talked about today, rightly so, is focus on maximizing investment points, both online, in the physical shops, through all the various areas, and really measuring productivity. The store is a big investment, and so we want to make sure that productivity measure works well. And the piece around marketing is always really fascinating. Internally, I think of us more as how do we grow the brand penetration and the brand market share? And marketing is fundamental to that. But at a strategy level, what is our brand reach? What's our brand penetration? What is the market we're growing? And who are our loyalists? And how big is that tribe that we can grow? And how do we continue to differentiate and innovate to achieve that? And I think the last point here is certainly treating consumers as people. Retailers reinvesting, even in a rising cost market, in their people, because customers are really looking for it. People want careers that are gratifying and satisfying, and certainly looking at the people side of the business is as important, if not more important than ever before.
Thanks, Brian. So I think at this point, we'll open it up to any questions we've got. If you want to put your questions in the Q&A, and we'll open it up to the floor before we wrap up. And just quickly a reminder, we've talked a lot about it today, about the work that we do at Retail Doctor Group. So we are insights-driven deployment. We can really help you find the opportunities, understand your business, all the things we've talked about today. So visit retaildoctor.com.au or connect with myself and Brian on LinkedIn, reach out to us. And finally, before we move into Q&A, the full Consumer and Retailer Sentiment white paper will be available to download from retaildoctor.com.au/downloads. And you will also receive an email from me this afternoon with a direct link. So if you are struggling to find it, you can wait for that email and it will come to you. So as an attendee today, you will get pre-release. This will be available to our exclusive CEO network from later today, and it will be available to the general public next week. So you are getting advanced access to this content as a thank you for attending and a thank you for being part of our retail community.
Yeah, thank you, Anastasia. Could I ask Adrian a quick question? There is a couple in the queue. Adrian, today we've talked about, at some level, we've talked about the need to invest in the infrastructure of a business, from business information systems all the way through to brand, people, consumer research, and so forth. But we're also hearing a message in the general marketplace about retailers facing increased investment costs, keeping costs down, trying to protect margin in that way. But there's a short run and a medium and longer term play here as well, isn't there? What's your general view there?
Yeah, definitely. Thanks, Brian, for the great question. I mean, definitely we see this in the public markets, this push-pull, because the investors, can get focused on short-term results, and we've certainly seen some retailers make decisions that are more long-term in nature to invest in areas such as data and digital in particular. We've noticed that in the last sort of 12 to 18 months. And naturally, that does drag on the reported earnings of the group. But, we believe that they are setting themselves up for the future, given all the, the trends and insights that you've shared today. I would say that from the public market's perspective, there seems to be a general preference. If stuff goes through the capital expenditure line, it seems to be more well accepted than stuff that goes through as an operating expense. So that's just, an accounting trick there. But I would certainly say that, at least for unlisted companies, I definitely feel like you've definitely got to focus on that longer term. And that's, you know, in speaking to a number of unlisted companies myself, I do appreciate that they do take that long-term view on the business and they're not so much focused on short-term results. Yeah,
it's a really good comment. And I often think, you know, increasingly this idea of return on investment, return on capital employed, even those axes are starting to change, aren't they, as the market accelerates. And the ability of retailers to, you know, I don't like using the word, but pivot, adapt, invest where it's got maximum brand building capability is going to be crucial, isn't it?
Definitely.
Anastasia, to you.
Fantastic. Well, I think unless we've got any sort of further questions in there, that's probably where we will wrap it up today. So I think any questions from the team that you want to address Adrian, I'm sure Adrian would be more than happy for people to reach out to him on LinkedIn, and he shared his email earlier if anyone's looking for a copy of the data. Thank you all for attending this on this very cold morning. And we do apologise for the last minute shift to a webinar, but as you can all appreciate, there's quite a few factors at play with floods and flus and everything going on. So we didn't think it was really safe for a physical event at the moment. So thanks everyone. And we'll give you access to this shortly. Thanks for staying with us this morning, and we'll see you all at our next event.
Which is August 17th with Matthew Robinson, the head of Lego. And Lego, a fantastic business. So we'll be talking about global and retail innovation there. Adrian, to echo Anastasia's comments, thank you very much for your insightful work, and delighted to have a partnership such as this. So thank you very much. Anastasia, a great piece of work, really insightful. So thank you very much for all your effort and the team at Retail Doctor Group, of which I'm part. So until then, signing off. Thank you very much.
See you later. Bye.
Bye-bye.
Thanks very much, guys. Cheers. Bye-bye.